Welcome to Season 2 of the Crypto Pulse podcast, your ultimate guide to the world of crypto, Bitcoin, and world economics. We're here to guide you through the crypto universe with thought-provoking topics, in-depth knowledge, and information to help you make informed decisions. We'll also be interviewing some of the best minds in the industry, such as CEOs of crypto projects, traders, economists, authors, and development teams from around the globe. And now for the episode.
This episode is brought to you by Yield App. Earn daily compounding interest on your digital assets with its intuitive web platform. And don't forget to refer your friends to earn extra rewards. Visit yield.app for more information. Hello and welcome back to the Crypto Pulse podcast for another one of our weekly episodes about crypto and macroeconomics. Ben, it's great to have you back.
Yeah, thanks. Well, I'm here every week. You can't get rid of me, try as you might.
I know. Well, but I say have you back. We didn't do our usual weekly episode last weekend.
That's very true.
So that's why I say welcome back.
Well, thanks very much.
Yeah, we had a special guest on to talk about mental health in the crypto space, and we got a lot of really good reactions to that episode actually. So thank you very much, everybody who's listened and shared that. It's greatly appreciated.
Yeah, and a big thanks to Claire as well for stepping in last minute. It was a great episode. I listened back. I think it's one of those topics that we just forget to talk about. And I think especially as we're kind of moving into a bear market now, and the sentiment is kind of being drained from not just the crypto markets, but also the global financial markets. Mental health is something that we've really got to be thinking about more often. So I think the timing was perfect, and it was a brilliant episode full of really useful tips. So thanks again, Claire.
Definitely. So if you haven't listened to that, please go back and listen to it because you'll get a lot from that. And, I got a lot from it talking about this stuff as well. So it was, it was amazing. It's an hour long. It's quite a long one, but there's a lot of goodies in there. So, what have we got to talk about this week? Because it seems like so much has happened over the last week or so. Where do we even begin?
Well, it's a really good question. I mean, I think just to sort of be frank, the markets are still pricing in the potential of a global recession.
They sure are.
You only have to look. Yeah, I mean, you only have to look at the Dow Jones, the S&P 500, and also just Bitcoin's price action to see that the markets are they're still pretty dovish. I don't think we're going to be in for any sort of major reversals anytime soon. The Fed in the US have already committed to raising the interest rate by 50 basis points for at least the next two meetings. There is speculation about whether they take a break after July's meeting, just to sort of assess the landscape. But in any event, I think it's likely now that we are heading into a period of global recession, and it's sort of, I would say it was sort of obvious that this was coming. You kind of look back at the fiscal policy over the last 3 years and how money was sort of injected into the system throughout the COVID crisis, and you only really had to look at that to know that there was going to have to be some sort of balance on the other side, and I think unfortunately that's now what we're going through. But when I have conversations about this, I think people feel nervous, people feel worried. They're not sure about, which way their investments are going to go. They're worried about the housing market. They don't know where the safe havens are. But the conversations that I'm having are also sort of littered with optimism. I think people are excited about the opportunity that some of these bear markets present. And as we talk about in crypto all the time, it's like there's going to be some great entry points. And I think providing you do your research, you find some great projects, the easy money will flow again. But I think we're looking probably 2024 and beyond.
I agree. Bear markets are great investment opportunities for people that are looking to build a buy and hold type portfolio, which is kind of what our strategy is. But it's natural to feel nervous around these times. What I always joke is that I know when Crypto Pulse is really in its prime is because we're in a bear market. We started this podcast at the end of 2017, just right towards the end of the the bull market before the one that's just happened. And then after that, we did this show through a whole bear market. And one of the things that we really noticed is what was being built in the space. Just because the price action of certain cryptos isn't where we want it to be, it doesn't mean to say that crypto is not being integrated into the mainstream and that people are not building, companies aren't getting investment. That is not true. In fact, it's the complete opposite of that.
Yeah, it absolutely is. It's funny you mentioned that we started at the end of 2017, series 1 of the show. And I always joke with friends that actually starting a new season of Crypto Pulse is my favorite top indicator.
Oh, shit. Sorry, guys.
But no, you're absolutely right. I mean, it's during these sort of bear markets and during these economic downturns that some of the best companies are built. Outside of crypto, you've only got to look at some of the companies that are in the Fortune 500. You've got Uber, Airbnb, Deliveroo. These are all businesses that were started during global recessions and are now sort of, built in with the bricks, aren't they? These are companies that we use every day.
Absolutely, yeah.
So it's also worth noting that on Tuesday of this week, Coinbase became the first crypto-based business to be included in the Forbes Fortune 500 after pulling in nearly 7.8 billion in revenue for the 2021 fiscal year. This is, it's a pretty huge milestone for cryptocurrency.
Huge
now, obviously,
huge numbers. That's staggering because I wouldn't say Coinbase is always the go-to exchange for people, really. It's like the McDonald's of crypto exchanges, isn't it, really, I guess?
It is, yeah. I think their retail products, I would probably say, are similar to the McDonald's of investing in exchanges. But actually, they've done really well in some of their OTC services. They've got some really good institutional products that are being used daily. And actually, they've expanded really quickly. Of course, they had their IPO back last year as well. And the IPO, whilst it went well, the stock price has totally tanked, but the revenue that they're pulling in quarter on quarter now is insane. It's like mega money for such a young company. I think for me, I'm going to be interested to see what happens with Coinbase as we kind of move through this recession, because obviously a lot of their revenue is built around transactions, transaction volume and people trading in the crypto space. So I don't know whether 2022 is going to be such a big year, but that said, I think it's going to be pretty hard going for everyone. But to kind of come back to the point, I think there's a lot of money now which has been pumped into businesses that are building proper things in the crypto space. So we've got projects like ZenLedger and Babel Finance are just a couple of examples of projects being pumped with investment capital. So Babel was recently valued at $2 billion after receiving an $80 million investment in its Series B funding. And ZenLedger has also raised $27 million worth of funding for its crypto tax services. So what we're seeing is that whilst investments in, across the board VC and private equity is slowing down, money is still flowing. And it seems to be that there's this huge focus on Web3 businesses. There was another fund this week, I think it was Andreessen Horowitz, that launched a $4.5 billion cryptocurrency fund for investing specifically into Web3 businesses. Gosh. So, the list really does go on, and I think it just speaks to what we say all the time, which is that when you have a new space like blockchain and cryptocurrency and Web3 and DeFi, the best companies are built during periods of recession. And I think if they can weather this period, it stands them in good stead for 2024.
Isn't it, really? If they can survive a bear market and come out the other side, but having built products, having added users, then that more often than not they're going to be solid and there for the long term. Plus, these markets just wash out a lot of the crap, and we've seen, we've certainly seen that over the last few weeks. But a lot of these projects that are poorly funded or poorly executed or poorly thought out, just don't survive. So, it's a harsh environment, but what it does do is it does make sure that we have projects and apps and blockchains that are built that people can rely on. And that's the most important thing is in this space, because if we want to see crypto adopted in the mainstream, it needs to be credible, and these businesses are building credible products.
Yeah, I agree. I also think that there's another side effect of building businesses through a recession, which is that you build really resilient founders. When times are good and startups are overcapitalized and cash is cheap, I think it can create an environment where decision making isn't that important. They can get away with making a lot of mistakes because they've got the money to sort of combat any problems that they create.
Gosh, that's very, very true. Yeah.
I think when you've got environments like this, it forces businesses to make harsh decisions, forces them to operate in a way that's just much more lean, and of course money isn't cheap, so they're very thoughtful about when they raise money, how they raise money, and who they raise money from. So all of those constraints, I think, combined create something really brilliant then when the tides turn. But it's exciting to kind of see all of this taking place. We always talk about the guys at Cadena that have a really similar ethos. And of course, they just announced their $100 million fund just a couple of weeks ago, and are already preparing to sort of deploy some of that capital into their first cohort, which is really exciting. And we actually have an announcement about this.
Oh, you were going to do an announcement, which we may mention an announcement.
Yeah, we'll announce the announcement. we might announce this at the end of the show today. So it's really exciting and something which we're really looking forward to doing. I think
we're dotting the I's and crossing the T's on that one still, aren't we? But
we are.
But it's going to be really good. Super excited about that. But yeah, if you're a developer and you're building something and you really want good quality blockchains that you can rely on. So fingers crossed, through this bear market, we're going to see more quality building.
Yeah, absolutely. And you only have to look at, because we've obviously gone through a period of huge economic upturn, and some of the businesses that were founded way back before the COVID period have absolutely boomed. You only got to look at companies like Binance and FTX, and just to look at their sort of cash positions now. I mean, they're in really, really brilliant position. And that kind of leads us on to our next story, actually, with Sam Bankman. Sam Bankman-Fried says he could spend up to $1 billion in the second US presidential election, which is coming up. I mean, that's just an astronomical figure and speaks to the amount of money that he's got sat in the coffers at the moment.
It sure does. If you could chuck $1 billion at something like that, then you kind of know that the guy's got a few quid, let's just say that. But we had Brett Harrison, the CEO of FTX, come on the show actually, a couple of months ago now. And I know he knows Sam well, so maybe we should have got him on to discuss this segment. But nevertheless, it's interesting what he's doing. What's your opinion on it?
It's interesting, isn't it? Because he's obviously treading in the footsteps of some of the major oil and tobacco companies that historically have been some of the biggest donors to these presidential campaigns. But you're right, Sam came out and said that he could spend up to $1 billion or more in the 2024 election, which would easily make him the biggest ever political donor in a single election. So speaking to Jacob Goldstein on his podcast, What's Your Problem?, Sam says he expects to give north of 100 million in the next presidential election, and that he has a soft ceiling of $1 billion if candidates like Donald Trump were to run. So this is not a new game for Sam, because he was one of the larger donors for the Joe Biden presidential campaign, and also donated over 10 million to support a candidate in a Democratic primary for a congressional seat in Oregon, mostly because that candidate focused on pandemic preparedness, one of Sam's main concerns in a list that includes animal welfare, anti-poverty, and healthcare, to name a few. So it's interesting to see someone like Sam come out and be so public about his plans for donation. when you think about the political spectrum in the US, to me, it's always seemed like it's the Republican Party that are more willing to accept and open to the idea of Bitcoin and decentralization, whereas you've got really prominent figures on the left or in the Democratic Party.
I knew you were going to say that.
I was like, any opportunity to slate Elizabeth Warren, but it's, they typically are more skeptical of Bitcoin and talk about, its eco credentials. So, interesting to see. I think Sam is playing an interesting game. The thing with some of the big oil and tobacco companies from the sort of 70s, 80s were that the donations were typically made by organizations, and they were a little bit more obfuscated, so you couldn't find them quite as easily. Whereas Sam is coming out and, just being very clear and transparent that this is money which is coming from him, really.
Well, I mean, in true decentralization and blockchain style, he said this. These donations are not a new thing. Like you were saying, a lot of the oil and tobacco companies were donating. I mean, we have a word for it in the UK, don't we, called lobbying?
We do.
I'm not by no means an expert on the US system, but what I do understand is that each party has to raise as much money as possible to take their political campaign around the country, and they're always, like, senators are always trying to get funding, always trying to get donations and stuff. I want to say a big thank you to YieldApp for sponsoring this podcast. Now, we may be in the midst of a bear market, but that's no reason to stop earning on your digital assets. YieldApp allows you to earn daily compounding interest on the biggest digital assets at the click of a button. YieldApp is a licensed fintech company built by a team with a strong background in traditional finance. YieldApp offers instant asset conversions, fiat on-ramp, auto compounding, and security features such as activity log, transaction history, and more. Simply deposit your digital assets and click to start earning daily rewards. And you can earn up to 1,000 of their native token, YLD, by referring your friends to YieldApp. You will also automatically join their monthly referral competition for a chance to win massive prizes. It's interesting how somebody in the crypto space wants to get involved in this and do this. And Maybe for the right reasons. I mean, certainly if he's on side with a current government, that may mean the future of FTX is a little bit easier, perhaps, and maybe there's some strategy around that. But I think in that system, the donations have to happen, and if somebody in this space wants to get involved in steering that, is that a bad thing? I'm not sure.
It's a good question. Ultimately, Sam's founded a business in the cryptocurrency and blockchain space. He's built an exchange which its revenue relies on people being able to trade and transact. So it would make sense if his plan was to continue to build FTX in the States. It would make sense that he was in a strong position to bring regulators on side and be able to steer some of the discussions around what that framework looks like. So this could be a strategic move from him. It's conflicting for me because I see that, as I said, the Republican Party tend to be the ones that are more pro decentralized finance. And, you've got people like Senator Ted Cruz that is a huge proponent for Bitcoin and goes to a lot of the talks and, champions it. But we'll see. It's interesting that, in the American system, candidates are allowed to raise infinite sums of money. There's no cap on what they can raise in order to kind of push forward their message during the campaign trail. In most countries in the West, there's a cap for what can be raised. I think in the UK for each candidate standing, it's something like £8,700 £6 plus 6p for every registered parliamentary elector. So the amounts that are spent in the UK is very, very small in comparison. That's not to say that we don't have other types of other types of influence,
like cronyism, for example,
from like cronyism. That exactly. That doesn't mean that we don't have that, because we do. Yeah, sure. Lots of ways to skin a cat, but it's very, very interesting in US. But you also have to look at the campaigns. I mean, I think back to just even 10, 15 years ago, I remember seeing some of the, some of the campaigns being run by people like George Bush and Bill Clinton. And they were glossy, and it was, it was definitely a spectacle. But, I think back to like Donald Trump and Hillary Clinton, and when she went out, it was, she was supported by Beyonce. She had like the Disney firework display. She turned up in a Hummer. Totally. It just goes to show that these things are not cheap, and candidates are willing to spend any amount of money to be relevant. Like Joe Biden is kind of part of that gerontocracy over in the States, isn't he? I think they're all sort of getting towards the end of their time, really, and they've got to wheel out people like Lady Gaga and Beyonce to sort of try and stay relevant.
Yeah, absolutely.
And that costs money.
Who was it that wore the tax the rich dress?
Oh, that was the young senator, AOC.
Right.
I can never remember her name.
So they have to appeal
that was ironic
to the younger generation that maybe don't understand that kind of system doesn't really work that well. But do you know what? I'm kind of glad that we don't have the American style system in the UK. I know ours isn't perfect, and it is kind of like a two-party situation still. But you look at the US and you think, God, if you were I think we probably both agree on this, but if you were a citizen there and you were voting, it would be a really hard decision to vote either way, and typically we would have probably been both, of course we'd vote Democrat, but like now I'd not be so sure. But there's some really cool parties that are up and coming, like the Libertarian Party that Joe Rogan's spoken about on his podcast before, that are all for small government and a completely different approach. And my personal view is I'd like to see some funding to some of these alternative parties, because the old guard have just had a run of it for so long now, and it's just the same stuff that goes on every single year. And I think we should try something different. And the US does affect the UK, it affects the whole world.
Yeah, you're absolutely right. I read an interesting piece the other day that talked about the political spectrum in the US, and it said that around 70% of Americans are actually more centered than either of the two parties. So when it comes to vote, they have a really difficult time choosing where to put the tick on the ballot. And during periods where, at the moment we've got a mostly democratic government in power, the Republicans will typically become more centered during the campaign trail to pick up on those sort of middle votes. Right. And then as they get in power, they typically, and the same with both parties, they typically move further out into the left or right spectrum. So what we're seeing now with the Republican Party is that they're probably coming closer into that sort of middle ground in preparation for the 2024 election. Fascinating to watch. It's the study of American politics is a broad thing, but it really is interesting.
I mean, I was reading something about this group called Gays for Trump, which I was like, oh, wow. It's like that's how bad the Democrats are. Really,
God.
Anyway,
did you ever see that weird video? Because he's got that daughter Tiffany Trump. Did you ever see? Okay, so Tiffany Trump is sort of like I don't want to be mean about her, but she's kind of like the daughter that they try and keep out the public eye as much as possible.
I don't know anything about her.
Yeah, well, she's like she's like the sort of like the daughter that they just really don't want to put in the public eye. So they've got,
is she like really progressive and left leaning or something?
No, she's not actually. She's pretty conservative. She's right. she's quite similar to Trump in lots of ways, but she's just got she's just got a big mouth, and she's just not a great she's just not a great spokesperson for the Trump party. But anyway, there's a brilliant video where she goes up, I think she goes out to one of these meetings for the Gays for Trump group, and she's the spokeswoman that the Trump guys have sent, and it's just the most embarrassing thing I think I've ever seen, where she's sort of having to go out to pitch for the Trump family and say, you know, we love the gays, and we've always been publicly supportive of the gays. It's one of those ones you have to watch.
I mean, honestly, I have no words.
Well, it was the last public engagement I think they ever sent her out for. That's how awful it was. The first and last.
I'll have to watch that sometime. God. Well, talking of weird stuff, it's probably a good time to move on to our final segment of the show with the weird world of crypto. I mean, sometimes I feel like the whole podcast is like the weird world of crypto. Yeah. But this week, we have found something very funny and quite interesting. And there's probably a few learning points from this. So a big shout out to Cal, our producer, for finding this article. Imagine if somebody could steal the right to Homer Simpson and force the show to close down, or snatch the intellectual property of Darth Vader, meaning Anakin's dad couldn't exist unless some guy on Twitter said so. Sorry for the spoilers, but come on, it's been 42 years now.
It's not true. That's impossible.
Well, thanks to Seth Green's utter stupidity, well, to put it nicely, that's what happened to his recent NFT-based animated show, White Horse Tavern. Now, the show's characters were based on Green's extensive NFT collection, ranging from mutant apes to punks. But after the show was created, and to note, production cycles for film and TV take a long time and a lot of money, Seth fell for a phishing scam. One of his main characters, Fred Simeon, was flipped for a $42,000 profit on OpenSea. It was sold to an anonymous collector known as Darkwing84, who purchased it for more than $200,000. Wow.
It's like the dumbest shit I've ever heard. Yeah, it's completely insane. Well, Seth Green is obviously well known for producing or being involved in the production of things like Family Guy and, you know, other animated shows. I think he also did things like Austin Powers, Robot Chicken, and he's pretty smart. This isn't a dumb guy, you know. He's well revered in Hollywood and actually creates some really brilliant content. So I imagine that whatever he was doing with his NFTs would have been great. But to think that he had sort of started the production already and created the pilot and used characters based around his NFT collection, and then his main guy got stolen in a phishing scam, it just seems completely absurd.
Maybe that could be season 2, or they'll just have to pay royalties to the hacker. I mean, you know, it's not even hacking, is it? It's a phishing. It's a totally different thing. You're just putting some bait out and see if people are gullible enough to fall for it. And you know, come on. I mean, yeah, it does lead to a really interesting point about things like IP and copyright and stuff stored on blockchains, that if you are the custodian of this, and then if you're creating something, especially in like a multi-billion dollar industry, you know, is that a problem, having one person as being the custodian that could, in theory, like this, fall for a phishing scam? So I think maybe having some intermediary custodian or something in the middle of between the person and the IP stored on the blockchain is going to need to happen at some point. What are your thoughts on that?
I actually agree. You know, you think back to the history of money and you think about the gold rush and why it then became important for there to be third-party custodians, because gold was easy to steal. People would be robbed. You know, they'd keep it in safes at home. And, you know, think back to the Wild West, people turning up with guns, that's it, your gold is gone. So then you'd leave it in a vault in a bank and you'd hire, you know, professionals to take care of your gold. then the banks clocked on to the fact that they could use that gold that was in custody to invest in markets and generate a profit for themselves. And if you extrapolate that out 100 years, you've then got the current banking system where all of our deposits are in the bank's using our money and paying us pittance. Well, I can see how this is going to play out.
Oh no! So they're going to collateralize future borrowing on the current fiat system with crypto.
Yeah, I reckon that's where it's going. Or these NFT people. I mean, the great thing, it's like with cash, isn't it? You can have cash under the mattress if you really want, or you can leave it in the bank. There's risks to having it under the mattress, which is if someone wants to rob you, they can. I think it's the same with NFTs and and any self-hosted wallets. I think there will be a place for third-party custodians. How that evolves is going to be interesting to see, because you may leave the responsibility to a third-party custodian for your NFT collection, for example. But who's to say that custodian doesn't rent them out to galleries without your knowing, and start earning off the back of your assets?
Plus, like for services like that, for them to be registered businesses, they're almost certainly going to want their customers to have full KYC. So if you're holding maybe some Bored Apes or some whatever the most expensive and elite NFT is, you may want to be anonymous, but as soon as you've KYC'd that, you've lost your right to that privacy. So it's like this option, isn't it? It's like, do you want maximum freedom and anonymity, or do you want a combination of having access to your crypto in a safe environment, but giving up some of your privacy? That's the question. So I think there'll be way more custodian services coming out. And I know that there's a few projects that are already working on this, but it does beg the question really, like these production companies and the management team and the people involved in this particular setup as to why nobody thought about securing these in a slightly better way. But you live and learn, I guess.
Well, we keep hearing a lot of stories like this, and I think that one of the things that's become glaringly obvious to me over the last few years is, whilst we all scream and shout about the current banking system and how it's weighted against the general public, actually there is a requirement for some of these services to exist. And there's so much dumb money in this space. I remember we did a segment a couple of months back about a group of people that had bid for the vintage book, the vintage sci-fi book Dune, and they purchased it at auction for $3.5 million, thinking that they were purchasing the rights to Dune, the sci-fi novel. And they'd raised money to create an animated series, and they were going to do a comic, and it was going to be an online spectacle. And only once they'd collectively purchased this book did they bother getting some legal advice. And the lawyers told them that that's not really how intellectual property works, and that they just now had a very expensive manual. And I think that just speaks to the stupidity in this space, people that are willing to spend an awful lot of money and not really understand how it integrates in the real world. And Seth is a shining example, sadly, of somebody that has lost a lot of money because of his own stupidity.
Well, at least you could probably argue that he could afford to lose a lot of money, whereas some people with their only Bored Ape have lost all their money because it's all been in an NFT, I think it's down
74% as well. I think the whole Bored Ape market's down big, man.
Yeah, well, it could fall further. Yeah. Well, if it goes down to 1 ETH, I'll buy one. Yeah.
Yeah, just for a laugh, just buy them at the bottom, just for the culture.
Yeah, exactly.
Just for the culture. And I'll tell my grandkids that I rode it all the way up to 100 million and then back down to zero. Just for the culture, man.
And they'll be like,
Granddad, I've looked at the blockchain and you're a liar.
I can see you bold it.
Like, you're right. You're totally right. Yeah, it's interesting.
Yeah, it is. And I think we're going to do more content. We're going to do probably a show around NFTs in general and about their use cases and stuff. I think we'd like to get somebody on the show to talk about that soon. We've got a few people that have contacted us that we may bring on. But we've got some exciting stuff coming up on the show. We've got this announcement of an announcement, which we can't talk about until the I's are dotted and the T's are crossed. But you might have picked up on that earlier on in the show. We could probably talk about it in the next episode, actually. And then we've got Zilliqa coming on as well. We had to push that interview back by a week because the team weren't available to record this week. And we've got some more exciting content around the crypto space. So thank you so much for tuning into our podcast. We really appreciate all the amazing reviews. And just remember to follow us on Twitter, crypto_pulse.
We hope you enjoyed this episode. It would mean the world to us if you could leave a review wherever you're listening. This really does help and allows other people to find us online. You can keep up to date with new releases of the podcast by subscribing and following us on Twitter or Instagram for the latest crypto-related news. Information provided by Crypto Pulse via this podcast, website, social media channels, and any other medium does not constitute financial advice, investment recommendations, or any other type of advice whatsoever. The Crypto Pulse team are not professional financial advisors. Trading and purchasing cryptocurrencies do carry risks, and anybody wishing to partake in such activities should seek professional advice.